Hello everyone, I'm James Jack with Ernestine J. Wilson Real Estate. Welcome to Skills to Pay the Bills, and with me, my guest from actually a year ago, Mr. Vinne Apostilico. He is the branch manager for McLean Mortgage here in Fairfax, Virginia. Now last year when he came onto the set with me, we were racing like we were after each other on the Autobahn. We have so many topics to talk about because there's so much to talk about when you talk about finding a mortgage, the mortgage industry itself, home buying, home selling, real estate in general. So this time we're going to take our time and just discuss a couple of pertinent things that have been happening in the past year. So, as always,
yes,
always
very
good to
nice
have
to
you.
see you.
Always good to have you here. Now, you and I, we pretty much every day look at what's happening in the industry and sort of scratch our heads and say, okay, and we put the puzzle pieces together, and then we find ourselves still confused at times, but a little bit farther along the line than most people who don't do this every day. So, in a nutshell, what's the status of the mortgage industry today?
The status of the mortgage industry.
Yeah, I mean, is it good or bad? Or do I need to take a few pills and wait and call you in the morning? What's happening?
No, I mean, after the mortgage meltdown, things definitely tightened up significantly. You know, it used to be if you had a pulse, you could get a mortgage. I would even think if you didn't have a pulse, you could get a mortgage back then. And
yeah, in fact, a couple of dogs got a couple of dogs got. That's an inside joke.
The mortgage business definitely tightened up, and you know, you really had to go. You really have to know the guidelines for the different products to be able to put someone in a mortgage. But I mean, we've helped. I mean, our company in the 5th and 6th year in business helped did 1.5 billion in loans. So obviously, there's a lot of people getting mortgages out there. So, you know, I think it's a great environment for buying a house with interest rates at a point to a point and a quarter off the all-time low in history right now, compared to last year where we were at the all-time low in history. Yeah,
actually with real estate sales, whether it's commercial or residential, a lot of people think that things are really stagnant, nothing has really moved forward, but there's been a lot of progress and a lot of activity. You know, every time we take people out, there are at least 4 or 5 other people coming to see the same house. So there's a lot of activity on both sides of the track, for both home sales and buying, and also for mortgages. So are you saying that it's a good time now to jump in and take a swim?
Absolutely. I mean, right now, if you look at real estate, and I was looking at historically in real estate, if people had bought at the peak back in the 70s, the 80s, the 90s, 2005, and now, the price in Fairfax County for the average median sales price, I believe, was it $538 in 2005, and now it's $540 in 2013. So real estate,
compared to how, say, 20 years ago, what would you have said? Oh, you just have to. I
actually have that sheet, and so let's look at this. So let's say 1981, at the peak, the price was $100,000 for the average sales price. Sold 15,155 homes. In 1991, 10 years later, the price was double at $204,886, about same number of homes. And then if we jump all the way to 2005, the price went from $204,000 to $538,000 with 30,000 homes sold. And 2013, the average sales price was $540 with over 20,000 homes sold. So real estate over the long run will always be a great investment. And using financing to buy it is very smart, mortgage finance. I mean, if you wanted to buy $500,000 worth of stock or mutual funds, I need $500,000. If I want to buy a $500,000 house, I could do it with 3.5% down.
Well, there's another gentleman who works with us here who would probably differ. He'd probably challenge you on that, but
he could buy it on margin and use 50%.
But he's probably thinking to himself, Don, he's probably thinking to himself, that is a good investment, along with the other investments. So we're looking at buying a house. The last time you were here, you walked me through the scenario of how someone could walk into your door and sit down, and in short order, you could get them pre-approved. Now tell me, what do they need to do before they even think about calling you and asking you or any mortgage lender how can I prepare for this? What should I do? What's in store for me?
Well, if someone's thinking about buying a house, let's say they're currently renting or owning a house, they should run their own budget and see how much they can afford comfortably in their own family with their own budget. Once they do that, the best thing, what I usually suggest is someone will call up or send an email and say they refer to me and want to get pre-approved for a loan. I always direct them to my website, McLean Mortgage Doctor. They go there, fill out an application. Very simple, it comes to me. Then I follow up with a phone call and I go through their entire application, run their credit, then I ask them to send their documents, their W-2s, their pay stubs, their bank statements, driver's license, tax returns. Okay, because we need that. I mean, some people have unreimbursed employee expenses.
So when you say tax returns, you're talking about, say, if this is 2014, you want to see either their 2013 tax returns being prepared, or at the very least what they did in 2012.
Yeah, depends if they're salaried or self-employed. So it depends. But I usually get a set of tax returns because let's say someone is salaried, but they do have unreimbursed employee expenses. The last thing we want them to do is say, you're good to go. And then we turn the file into processing and their tax transcripts come back with some expenses on there that we didn't see, and all of a sudden they don't qualify for a loan. That's a disaster. So we get everything up front. We go through their numbers. We come up with, we look at their down payment and down payment options, their monthly payment, their closing costs, and then their approximate tax deduction. So now they're armed with a pre-approval, and actually we do something called our Loan First program, where we actually take those documents up front, put their loan through underwriting up front, and get an approval. So now when they're out looking at houses, okay, with their realtor, they're looking at a house, they actually have a commitment letter up front. And the only thing they need is an appraisal, title work, homeowner's insurance.
Okay, now that's a laundry list. So we're going to weed out all the things that scare people.
Okay.
We're going to go back to the budget. That scares a lot of people because they think they've got to go out, hire a CPA, when in essence there are lots of tools on the web. There are lots of little things that they can go to, to the library and pick up and just take the template and follow, the yellow brick road, as it were, in terms of what their expenses are. How much are you making? How much are you spending? How much are you saving? How much is actually yours? So give me sort of like an idea of what if you were not a mortgage lender, how you would prepare a budget.
Oh, I actually use a budget. I use a one-page form that I was taught.
One page?
Because, it's a one-page budget form. Write it out every month. And we pay bills once a month. Because that means we work on our money 12 times a year. So we write out all the bills. So you take in all your income, you write out all your bills, and then whatever's left over is your savings. So if you don't have a budget, what happens? If you don't actually do that, what I have found, my experience is anything left in the checking account will disappear. It just goes away, right? So we actually set it up. Checking account is for bills and bills only. Savings account is for spending money, and money market is your reserve account. You need at least 3 to 6 months reserves because the poop does hit the fan. I mean, all we have to do is look back to the mortgage meltdown and tons of people out of work, people upside down in their houses, losing jobs. I mean, if you didn't have a cushion there, what are you going to use? Credit card, and then get into a lot of debt, and then all of a sudden you're in trouble. So by having a money market fund as your emergency fund with money in there is extremely important. But my point on the budget is really you just have an idea of how much you're spending initially, and most people, well, I guess a lot of people do have a budget, but a lot of people really don't really have a formal budget. So when they come to us, our main focus is to get the documents we need to make sure that we can pre-approve them and then let them know where they stand at that point. So a lot of people are surprised. They can actually buy more house than they thought, and some the other way around. Some of them are, they thought they could buy a house and they think they can, but they really, are not very, very close. They don't have any money saved whatsoever. They have a lot of debt. It just depends.
Well, how should I say it? What is it? Sue experience? Is it? No. Mi casa, su casa, whatever. But you understand what I'm saying?
Yes.
We have shared experiences. It took a while for me to actually get into that discipline mode of knowing that to do something down the road, you must prepare for it now. So a budget really isn't such a hard, thing to do. It's really not such a steep mountain to climb. It's just something that you just get into the habit of doing, like you would your grocery list, and you actually get a chance to see what life is going to be like 3 months from now if you stay on course.
Well, think if you're a business and you don't keep track of your inventory. If you're a
Until
store
you will
and you
keep
don't
track
have
of it for
inventory,
you.
How would you have supplies there? If you don't know your numbers, great example I always use, baseball. Okay? I mean, imagine a batter. I bat real well. I mean, come on. Everybody knows the batting average, right? They know the exact numbers. And that person's batting 270, and the guy that's batting 290 is probably worth another $3 million a year. So they know the stats. So imagine if you're running your household and you have no idea what it costs you per month, or you just, it's $6,000. Is it? Really, what does it cost you per month to live? What's your survival number? Bottom line, you have to know your survival number. So, I mean, that's the basics of finance. If you're running your household, your household budget is your family's profit and loss, because today, unless you do work for a company that offers a pension, which, I mean, heck, some companies have even, pensions have gone broke and they're gone, so they don't pay them. So you have to save for your own retirement. So having your own budget is extremely important. Like I said, I use a one-page form, very simple, and if you're going to save money to purchase a house or for any major purchase planning, I think a budget is key. Having that set up.
Well, that gives me an idea. Maybe I'll get you to come back and we'll take a one-page budget go down line by line and show people what they should put in there, and then they'll actually see how simple it is. Sort of like pumping gas. Also sort of reminds me of a story, a very quick story. Jim Palmer once said that he could remember virtually every batter who stood before him. And when they would come back, he said he knew that they knew how he pitched, so he had to know how they batted. And as a result, that kept his ERA lower, but also every once in a while he would be surprised. I'm James Jack. This is Skills to Pay the Bills. My guest is Mr. Vinne Apostilico. He's with McLean Mortgage. He's the branch manager there. And when we come back, we're going to talk more about what you need to do if you're thinking about buying a house or refinancing. We'll be right back.
About a year ago, Mark and I thought, air pollution, global warming. How can we make a difference? So Mark modified our car, some sort of homemade energy source.
The best part is the car emits only helium.
Genius.
But the EPA says the energy we use in our home can cause twice the greenhouse gases of a car. So now I look for products that are in the Energy Star. Simple.
The EPA invites you to go to EnergyStar.gov to discover what you can do to reduce air pollution.
Yes, we're back. I'm James Jack with Skills to Pay the Bills, and my guest is Mr. Vinne Apostilico. I'm with Ernestine J. Wilson Real Estate. We service both Maryland, D.C., and Virginia, and we talk a lot to Vinne and his staff. Shout out to his wife, Susan, who without her, he would not be the man he is. She actually is the nuts and bolts of it all. All credit goes to her. Okay, just a few minutes ago we talked about getting your budget together if you're thinking about getting a loan to buy a home or to refinance. And it's really not such a big task. It can be done with one sheet. And one day we'll actually show you how to do it if you're so inclined to just sit here and watch for 15 to 20 minutes, and you'll be surprised how much it's going to help you. We started off talking about the state of the economy as far as mortgages go. We all know that we're just coming off the heels of the quote-unquote a setback, a recession or whatever. But while all of this was going on, in certain areas, the values of property were really not affected so much. And in fact, a lot of areas in the Washington, D.C. metropolitan area were almost storm-proof. They survived, maybe a couple of dings and dents and things like that. So we don't have to worry about those people. They've got it together. But you're the type of person who's wondering, am I ready to buy a home? I walk into Vinne's office with you, I sit back in the corner and I watch him work his magic. Tell me what do you do when they walk in? And they tell you that they want to go out and look at a house tomorrow.
Okay. Well, that's a great example. I actually had someone call on that exact situation today. Okay. What I did, he called up. He didn't come in the office, but I asked him to go to my website, McLean Mortgage Doctor. He filled out the application online. It came right through to my system, right through to my email alert that I had it. Opened it up. Then I gave him a call back. Went through the application with him. Ran the credit for him and his fiance. Asked a bunch more questions. He didn't have the 2-year history of where he lived down. You know, most people don't fill everything out perfectly, so I get the rest of the information, just basically data entry, okay? And I went over his income with him, assets, down payment. I always ask them what their target price is and their goals. And in this particular case, a gentleman was looking for a house, $650, but you know, max 7, 20% down, 30-year fixed. So I ran the credit for him and his fiance because they're not married, so you run them separately. Went through and worked through a couple credit issues.
That you are aware of now.
Yeah, I have it. So I have the credit issue. So basically, when you price out a loan, there is a difference between pricing for someone that has a 740 credit score and someone that has a 739 credit score. That's the break point. And on that size loan, it's a half point in points. So that equates, depending on how prices line up that day, an eighth in rate. And there was another couple issues on the credit. One of them was an authorized user account. So you mentioned my wife, Susan. She is the credit expert, and whenever I have something like that, we run it through the credit simulator and see what happens if we removed that her as an authorized user, what that would do to the credit score. So that's a big deal. The other thing is a lot of people don't know that they might have a collection on their credit report. You know, they have perfect credit, no lates anywhere, but they might have a collection hanging out there from college, or they had a medical bill that maybe the person typed in incorrectly, and it's, you know, $75, $150. So that'll pull your credit score down, an unpaid collection.
And another thing too, I just want to interrupt for a second. You may get your FICO score from one credit reporting agency, and you don't see any of this information that you're talking about because it may show up, say, it may not show up on TransUnion, but it may show up on Experian or whatever the case may be,
right.
Or Equifax. So you're thinking, hey, and then you find out when the credit is pulled again, you know, that there's this student loan hanging out there that you thought, you know, was taken care of. So this is something that people have to be aware of.
Yes.
Poop happens.
Yeah, we get all 3 scores whenever we run it. We just, period. You get all 3 scores, so you have everything to deal with up front. So at that point, we consult on what we should do there. I go over what their current rate would be at the current score, and then if we fix these things, what the score would then be, and what the rate would be. Also, if they were putting less than 20% down, there's mortgage insurance, and the price of the mortgage insurance is significantly different based on the credit score. It's huge, actually. As an example, let's say they were putting 10% down with a 740 score. That would cost about, let's say the price is let's say it's 1.6 points, or 1.6% of the loan amount. So if that was $100,000 loan, that'd be $1,600. But with let's say a 680 score, that price would be 3.5 points. So that's, let's call it almost a 2-point difference. And on a $100,000 loan, that's $2,000. On a $500,000 loan, that's $10,000 difference. So we all, are they going to pay that up front, or are we going to compensate it with a little higher interest rate to cover that cost? So those are some of the things that I go over on how to best put it together based on their current asset situation. So a lot of stuff on credit. I mean, we could spend a day or two on credit, but I go over it, go where they are, and then where we believe we can get them to in a short period of time. Go over their monthly payment with them. And then I do an itemized fee sheet so they know every cost involved start to finish. So now we got the down payment, their monthly payment, all the closing costs. So then when they go back to their real estate agent, they know that they can buy this house. They are pre-approved. Okay, then I get the documents and actually can submit them and get them approved. But at that point, the loan, I know I can get them a loan. They're in the box. Like if this is the box and you're in here, you're getting a loan. If you're here, you're not. So they were in here, they're going to get the loan as long as the documents confirm, like their income docs and their asset docs confirm what was in the application. They're going to get the loan. Okay, so they're good to go at that point. But now, armed with that, they're pre-approved and they have their itemized fee sheet, so they know all the costs associated with the loan. So let's say I'm buying a house for $700,000, but I only have the $140,000 for down payment, and it costs me $15,000 to close. Well, would I also pay $710,000 for a house and get the seller to pay $10,000 in closing? Right. So at least they know what they're doing up front, and obviously from so I set that up so they know where they can go. Strategy, and then they work with the strategy with their realtor. Once they know their numbers, now it's simple. Now they just go find a house. Although that's tricky in today's market because it's extremely competitive out there. Extremely competitive. From what I'm seeing, we write pre-approval letters. There's 6 offers. People are waiving appraisal contingencies, and it's competitive because there's a lack of inventory from what I understand in the market. So the market is hot.
Well, let me tell you, if today is Friday and tomorrow is sunny and you go looking at a house, you can expect when you get there will be 2 people there, or when I say 2 people, I mean two separate buyers, whether it's a family or a single person. Everybody's walking through the houses. Everybody's getting all the information. It used to be so you only got the information from 1 or 2 sources. Now there are lots of different sources. People don't just drive by. They go on the web, they see the houses, they plan their days, they go out and they take a look at the house. You're not the only one looking at this house. Right. This doesn't mean that you have to get into a competitive bidding war with someone else. Just use a little common sense in terms of how much are you willing to pay for this house? How much can you afford? And if you need, say, maybe a couple of other things to sort of help you to get over, that. We were talking about second trust loans and, buyer assistance programs and things like that. They're out there. Sometimes you may be able to help them, but sometimes they may have to wait or whatever. The market has just become more competitive. It is alive and well. It's not stagnant. And the requirements are more stringent than they used to be.
Right. It used to be, let's say you were here. You could get approved here, but you're right here. You're a little over the edge. A lot of times we'd run that through. I mean, here's your basic guideline, but you'd run it through, and it would still approve it here. We'd run it through automated underwriting, Fannie, Freddie, and if that works, our automated underwriting system, then you can do the loan. Well, now that guideline has got a lot tighter to right here. So if you're over here, it doesn't approve it anymore. It's pulled you back here. So it's really critical to get pre-approved, and that's why we're using our Loan First program so much. We're getting all the documents up front, putting it through underwriting, getting an approval. Because if you're going to a house and someone's got my Loan First approval, and the listing agent's looking at 4 offers and saying, well, hold on, this person is already approved. You mean the only thing you need is your appraisal, your title work, and your homeowner's insurance. That's it. This person, I've got a pre-approval letter. Well, the Loan First is a lot more powerful, so it gives our clients a lot more negotiating power when they're going out, or when in a really competitive bid right now, their offer stands out.
No, you talk about...
Because it's done. It's the same as cash. You're good to go. No,
you're talking about competitive. All mortgage lenders are not the same.
Correct.
They're all not. Everybody doesn't dip from the same well. So people have to shop around, or I imagine most of your clients are referrals.
Correct.
Because of the fact that you've done business with other families or people for years, and they come to you. And the same is true with other lenders. That's where they get their information from too. But the key is to be prepared, be realistic, and to stay on point. And one of the things I like about you is that you guys always explain it the way it is, not what ifs, maybes or this or that, because something will always happen. You know, something always happens. Or what we try to do is keep things from happening by being upfront and, you know, in the interest of full disclosure, as they say, you're letting people know what they can expect. So, in a nutshell, you're happy with the way the mortgage industry is going now, the mortgage lending industry, the times, you know, the way things are.
Yeah, so it's a good competitive environment. I think the mortgage business has shaken out a lot of people that probably should not have been in the business, just like it did with real estate, right?
Yeah,
Tons of, I mean, people just jumped in the business without really any training or skill just to write business, and I believe most of those people are not in the business anymore, which is really good because, you know, when you're handling your largest financial transaction, okay, think about this, your largest financial transaction, and you know, the first question usually people ask is, well, what's your rate? If they're not referred real well, right? But what I find interesting, this is always a little different, interesting point, but
make it quick, cause
people gladly will tip 18 to 20% for average to lousy service to a waitress, and then they handle their largest financial transaction. And I would think that when you're really paying for negotiating and how to put the deal together correctly, can be worth tens of thousands and over your lifetime hundreds of thousands of dollars when you do this. And so how come the top people have the top advisors? So I think, you know, having a great real estate agent, a great mortgage or lending advisor, liability specialist, having a top financial advisor is critical. A great CPA. When you're handling your money, it's important to have a great watchful eye on it to make sure that you're getting the best advice.
And what is just as critical is the fact that we've run out of time. It's just like whenever you're having fun or whenever you're getting really good information, there just seems to be very little time. Until the next time, I'm James Jack. My guest, Mr. Vinne Apostilico with McLean Mortgage. We've had a wonderful time here trying to inform you. We will be back again. Until then, you have yourself a